Hello everyone. As you all know, yesterday economic survey got released, so I Shubham Sharma will give you an overview regarding to economic survey. In this particular video, we will cover what all the important provisions that were mentioned in the economic survey. Apart from that, what all achievements India had achieved during this time, and apart from that, what all are the future projections regarding to growth and regarding to the development aspect. So let's start this session. First of all, if we talk about the first thing, that is state of the economy. This state of the economy talk about what is the current scenario of India, what is the growth projections of India, and apart from that, how overall our economic look likes. So world economy remain fragile. As you all know, after Donald Trump became the president of the US, the Trump tariffs and all that uncertainty will prevail in overall world. Geopolitical tensions, trade fragmentations, and financial vulnerabilities affected the whole world. In overall these problems, Indian economy made a great achievement. For financial year 2026, real GDP growth is 7.4% and the GVA growth is 7.3%. Now, remember this thing, it is real GDP growth. That simply means this growth adjusted the inflation. And apart from that, the GVA growth is 7.3%. That simply shows that the sectoral growth of our three sectors, whether it is primary sector, secondary sector, or tertiary sector, the sectorial growth is 7.3%. And we are proud to say this thing that Indian economy is the fastest growing major economy for the fourth consecutive year. So this is just a shape that we talk about the state of the economy in the present time. Now, if we talk about the consumption and investment, see, for any economy, the consumption and investments are very important. Why consumption is important? Because if the consumption grows, it actually led to virtuous cycle of economy. Because if the demand is more, it enhances the production, which increases the employment, which enhances income, then saving, then investment, and that increase overall GDP. So if we talk about the private final consumption expenditure grew by 7%. That simply shows that the people want to actually incur the expenditure, and that will rotate that virtuous cycle of economy. Whereas if we talk about it is around 61.5% of GDP. So private final consumption expenditure is 61.5% of GDP, which is highest since 2012. Now, what are the reasons why this private final consumption expenditure actually increase? The reasons are, first is low inflation. As you all know, RBI had made that inflation targeting of 4% plus minus 2%. That means if the inflation remains between 2% to 6%, that states that Indian economy overall inflation growth is stable. So in context of why this private final consumption expenditure increases is because of low inflation, stable employment, rising real income. Now this is again a very important factor here, that the income of the people whose income increased, this is not a nominal income increase, it's an increase in income of their real income. Then apart from that, strong rural demand. Now this is again a point that need to be noticed here, that the rural demand also increases because of good agriculture, and the inequality gap between the urban areas and rural areas also shrinked. So this shows a kind of positivity in Indian economy, that the rural demand has also enhanced. Then urban demand support by tax rationalization. As you all know, in the last year's budget, government has increased the tax exemption limit also. So that also led to more income with the people, and that enhances the disposable income of the people. So that is the reason this consumption pattern shows that a kind of people are demanding the goods and services, and that led to increase in overall GDP prospects. Now if we talk about investments, remember this thing, investments if done in the assets, things like capital expenditure, if we are doing, that will actually lead to economic growth. So if you see here, gross fixed capital formation grew by 7.8%. Now this is again a key growth in this prospect, that the gross fixed capital formation grew by 7.8%. Now, gross fixed capital formation talk about investment in fixed assets. Investment in those assets will lead to developmental aspects, like those expenditure that are asset creating, capital expenditure forms. And investment are 30% of GDP. The investment currently running at 30% of GDP, boosted by high public capital expenditure and revival of private investment as well. Now, if we talk about this capital expenditure, these capital expenditures are led to will lead to future growth prospects of the economy as well, because these capital expenditure done in infrastructure will enhance our overall productivity as well as growth and provide maximum employment as well. So, revival of private investment, which which was earlier very reduced, but now there is revival of private investment, that simply shows that the investment fortunes of our economy also enhanced. Further ahead, service, the growth engine. As you all know, if we talk about the sectoral growth, the three sectors, primary sector, secondary sector, and service sector, these three sectors actually make our economy look like complete. So these three sectors, if we talk about service sector, provide the highest contribution in the GDP. Service sector include banking, telecommunication, finance, retail, and all these things. So service GVA for the first half of 2026 is around 9.3%, and the full year estimate it will be 9.1%. So service share in GDP is 53.6%, and for GVA it is 56.4%, that is highest ever. So I'll request you all that if you are writing any mains answer, then you should use these kind of datas, because these are the latest datas available. So service sector growth, especially in context of GVA, is highest ever. Moving ahead, industry and manufacturing. As you all know, to become a developed nation by 2047, this sector government is primarily focusing on, especially after constituting Make in India, Atmanirbhar Bharat, and recently production linked incentive scheme. Government is targeting this sector a lot, because if this manufacturing sector grow, it will provide agriculture provide a base to this, and this sector is also providing a base to the service sector as well. So industry and manufacturing sector is the prima facie focus of the government to develop the economy. So if we talk about the GVA of industry and manufacturing for first half, it is 7%. For quarter 1 financial year 2026, it is 7.72, and for quarter 2 financial year 2026, it is 9.13%, which indicate structural recovery, not just cyclical bounce. Now, this is not a kind of a fluke that it is just a cyclical bounce. The survey told that it is because of structural recovery. And especially after launching that PLI scheme, we see that specific sectors, especially if we talk about smartphone industry, and apart from that, other industries also, especially pharma, these things are continuously growing. And that is the reason this industry and manufacturing sector shows the growth prospect. Then if we talk about agriculture, now, there is also a big change, and UPSC may ask a question in prelims regarding to the third statement. We'll come on that also. But food grain production is around 3577.3 LMT. Then there is an increase in food grain production thanks to the good monsoon, as well as for the efforts of farmers, and because of launching of special schemes, especially PM Kisan scheme providing 6,000 rupees in 3 installments also promote the disposable income of the farmers. Then horticulture, now bigger than food grain. Now this is a point that UPSC may ask in exam. So horticulture crops, fruits, vegetable, nuts, and all these things actually grow more than food grains, and that will fetch a good income to the farmers, because they are considered as cash crops as well, and this will promote the overall living standards. Then livestock and fisheries showing long-term momentum. Pradhan Mantri Matsya Sampada Yojanas. Apart from that, livestock missions like Rashtriya Gokul Mission, and focusing on different prospects, creating Gokul Grams. All these things will lead to promoting this agricultural aspects. Then let's talk about the revenue and taxation aspects also, because this is a kind of a source which will generate income for the government. यही वो source है जहां से government के लिए income create होता है. So center's revenue receipt is 9.2% of GDP. Now, if you talk about the expenditure and receipts, receipts are basically two types: revenue receipt and capital receipt. Revenue receipts are kind of income which is a kind of recurring income for the government, like interest receive, income received through fees, penalty, fines, dividend income. So revenue receipt is around 9.2% of GDP. Then second is capital receipt. Capital receipts are also of two type: debt creating and non-debt creating. Non-debt creating capital receipt means when the government do the disinvestment, that is a kind of non-debt creating capital receipt. And debt creating capital receipt is that receipt which government takes through borrowings. Okay, but they need to pay it back. So non-corporate tax buoyancy is also strong. Now, what is this tax buoyancy? This tax buoyancy talk about like how the increase in tax, in overall tax, because of good prospects like proper tax administration, tax friendliness. Apart from that, if you heard about a kind of simplification of tax process, this is all covered in tax buoyancy. So non-corporate tax also gets stronger. Income tax returns, people are now getting aware about their responsibilities to pay the taxes. So financial year 2022, 6.9 crore people file the returns, and in financial year 2025, 9.2 crore people are filing this taxes. Then if we talk about GST collection from April to December 2025 is 17.4 lakh crore, and also after the execution of GST tax rates by slashing those two tax rates and having only two tax rates now, that is 5% and 18%, also enhances the GST collection for the government, because people are now willing to pay those GST, because for 5% it is for essential things only. So apart from that, growth is 6.7 year on year basis. Then e-way bill up by 21%. E-way bill is up by 21%. What is this e-way bill? So whenever the goods move from one place to another and the consignment value is more than 50,000 rupees, they need to carry this e-way bill. This e-way bill have a detail regarding to the goods, regarding to the consigner, the producer, and the final consumer. So everything is mentioned in this e-way bill. If it contain and it is mandatory for the transporter to carry this, if he is moving goods from one place to another, the value must be above 50,000. Now further, capital expenditure and deficits and debt. Now this is again very important. Expenditure are again of two type: revenue expenditure and capital expenditure. Revenue expenditure refers to those expenditure which is a kind of recurring expenditure, like expenditure done in salaries, pensions, expenditure done in interest payments, expenditure done by paying of subsidies. This is all revenue expenditure. Whereas what is capital expenditure? Capital expenditure is asset creating expenditure. It is a kind of expenditure which is generating long-term revenue projections for the government, like creating an airport, creating an infrastructure. This is capital expenditure. So central capital expenditure is 4% of GDP, whereas effective capital expenditure for financial year 2026 budget estimate, it is 15.48 lakh crore. That means what is effective capital expenditure? That means grants are also given for capital expenditure plus grants given for creating capital expenditure. So it is 15.48 lakh crore. States are also getting supported through special assistance to states for capital investment. Government is also supporting the state governments as well, so that they will do more of capital expenditure, which is an asset creating expenditure. So here, if the states get this support, they are also continuously doing this capital expenditure, which enhances the employment of overall state. Then state's fiscal deficit is 3.2% of GDP. What is this fiscal deficit? Fiscal deficit is total expenditure minus total receipt, excluding debt creating receipt. That means debt creating receipt is not included in total receipt, because you need to pay it back. Then general government debt reduced by 7.1 percent points since 2020. Now this is again a point that we need to consider. Government always want that debt to GDP ratio need to get reduced, because if debt to GDP ratio get increased, government need to pay interest on it. So it is obviously in a consideration of the government that the tax to GDP ratio need to enhance, and this debt to GDP ratio need to get reduced. So general government's debt reduced by 7.1 percentage point since 2020. Then apart from that, monetary and financial sector, if we talk about banking sector, the biggest headache is non-performing assets. So if we talk about the gross non-performing asset, it is 2.2%, that is multi-decadal low. So gross NPA also reduced to 2.2%, and net NPA is 0.5%, which is record low. Now, what is this net NPA? Usually the banks create a provisioning, एक प्रोविजन बनाकर वो रखते हैं कि अगर एनपीए होगा तो इस अमाउंट से हम उस एनपीए को कम कर लेंगे. सो व्हाट इज नेट एनपीए? नेट एनपीए इज इक्वल्स टू ग्रॉस एनपीए माइनस प्रोविजनिंग मेड बाय द बैंक. सो नेट एनपीए इज 0.5%. Credit growth is 14.5%, which shows that investments are increasing because people are taking loan as well. Now, because it doesn't mean that always the loan is taken for investment, but if it is taken by corporates and businesses and that enhances the investment, that's a good sign. Financial inclusion. Why this is important? Because if the more the financial inclusion, more the saving, more the investments. So because of jam trinity and especially because of Pradhan Mantri Jan Dhan Yojana, almost 55.02 crore account got opened. Mudra loan dispersed for 36.18 lakh crore. Shishu, Kishore, Tarun Plus, they are the four categories of Mudra loan. So here 36.18 lakh crore loans dispersed. Accordingly, overall demat account got opened is 21.6 crore, and there are almost a unique investor of 12 crore, that is 25% of women. That shows people are now thinking to invest their money apart from FDs in mutual funds and in stocks as well. So this is about the monetary and financial sector outcome. Talking about the external sector, most important, and currently because of geopolitical tensions going on, this sector need to be very much focused on. So if we talk about the total export, it is US dollar 825.3 billion. That is in financial year 2025. Service export is 387.6 billion. That is a growth in 13.6%. And you all know Indian economy is known for its service exports. So out of this 825.3 billion, 387.6 billion is service exports. And India's share in global, if we talk about merchandise export, is increased from 1% to 1.8%, and service exports increased from 2% to 4.3%. Talking about the remittances, it is around $135.4 billion. That's world largest. That means the money that Indian receives from the people who are residing abroad. Current account deficit, it is 1.3% of GDP. Talking about the quarter 2 of financial year 2026. Then if we talk about, this is again a very, very important point. Forex reserve is 701.4 billion US dollar, covering which give a import cover of 11 months and cover 94% of external debt. That shows how strong and resilient Indian economy is right now. Then moving ahead, inflation. As you all know, inflation means sustained rise in price of goods and services over a period of time. So inflation targeting done by Monetary Policy Committee is 4% plus minus 2%. CPI inflation, again very important for this targeting, and RBI uses this CPI inflation only to measure whether the inflation remains in the target range or it is going beyond that. So CPI inflation April to December 2025 is around 1.7%, lowest since CPI series began. That shows that the CPI inflation is 1.7%, which is lowest. Then, among emerging market developing economies, India saw one of the sharpest decline in context of inflation. Then, infrastructure considered as the pillar of economic growth. So, if we talk about the high-speed corridors, it is earlier it was only 550 kilometer, enhances to 5364 kilometer. Rail electrification 99.1% it was done. Now only 0.9% electrification is now remaining. Airports, earlier it was only 74, now it is 164, and government is focusing on Udan initiative a lot. Then power capacity enhances to 509.74 gigawatt, where the renewable share is 50%. And discoms, now this is again a big headache for the government, that discoms are usually in losses, but if we see, discom posted profits for the first time. That shows that the distribution of electricity is now also in a safer hands. Talking about the social sector, again, that is the kind of a sector which is directly leads to the development and also reduces the Gini coefficient part. So if we talk about the social sector, education, gross enrollment ratio in primary education is 90.9, upper primary it is 90.3, and for secondary education it is 78.7. Talking about the institutions, we have now 23 IITs, 21 IIMs, and 20 AIMS. Then we have IITs in abroad also, especially in Zanzibar and Abu Dhabi. So now Indian Institute of Technologies is in Zanzibar and Abu Dhabi as well. Then health sector, maternal mortality ratio, it's down by 86% since 1990. That is for 1 lakh out of 1 lakh women's. How many women's got died? For IMR, infant mortality rate reduced from 40 to 25. That out of 1,000 live birth, how many childs got died? Then India outperforming the global averages. Global average को हमने पीछे छोड़ दिया है. Employed population is 56.2 crore, where e-shram registration is 31 crore. E-shram registration is for unorganized workers, and here the 54% women are there in out of this total e-shram registration. Then National Career Service Portal says that vacancies mobilized is 8 crore plus. That means this National Career Service Portal shows that 8 crore plus vacancies got mobilized. Now, this is very important, and in mains exam, if you want to write this, do write it in a very proper sense. Future vision, that is Viksit Bharat 2047. As you all know, we have a target to make Indian economy developed by 2047. Three special aspects were focused on regarding to AI ecosystem. First is small task specific models. As you all know, AI is creating an impact on overall world, but India focus on this AI for its genuine needs, like AI for crop disease detection, AI for TB screening, and AI for traffic management. This is what India is focusing on right now. Then low resource, low solution, patchy internet, apart from that, low computing power, multiple language, and cost sensitivity. That means India need this AI, but that need should be India specific needs, not a kind of needs that is not required for our country. So they are focusing on that small task, low resources, local solution, and AI can help the actual people, which are what we can say, which are the pillars of economic growth, like farmers, asha workers, municipal bodies, and schools. So this is what they are focusing regarding to AI. Then the second is disciplined Swadeshi. What is this disciplined Swadeshi talk about? Disciplined Swadeshi talk about that we need to enhance the production of those things on which we are very much dependent on other economies, especially in context of semiconductors, defense equipments, and critical minerals. As you all know, China is the major producer of semiconductor, and India want that the dependency on this semiconductor need to reduce. So disciplined Swadeshi talk about that import dependence is dangerous, but we cannot say this thing that we will not import. We will import, but we will gradually reduce it, because if we are focusing on that 100% no import, then that is not practically possible. So government want to intervene through PLI scheme, strategic stockpiles of especially semiconductors, defense equipment, and critical mineral. Then tier 2, feasible domestic capability. India can need to produce the things with for at reasonable cost, and they will provide a long-term revenue as well as growth projections, especially in EV manufacturing, solar modules, apart from that in pharma products. So through incentivizing private sector, build ecosystem, and improving ease of doing business. And talking about the tier 3, that is strategic indispensability. Friends, as you all know, overall the whole world is depending a lot on China for their demands and requirements, and they are facing a lot of issues because of unnecessary demands and because of supply shocks sometimes made by the China. Already they are very much what we can say, they are in a problem that Chinese government putting lot of levies on their goods, as well as dumping their goods in their market, and impacting their overall domestic market. So they are looking forward toward India, that India can become a country who fulfill their requirements. Now it's the best time for India to grab this opportunity and fulfill the demand of the world. And India is actually making a lot of effort to become a global manufacturing hub. In the service sector, we are already dominating, but still, this service sector also needs to get improved. And in the manufacturing sector, there's a lot of work that we need to do, especially promoting skilled based knowledge for our workforces in context of IT and digital services, pharma supply, space services. It is a kind of a time where India need to realize this thing, that if we grab this opportunity in this particular time, we can become a superpower and we will march towards the path of developed nation by 2047. It's earlier it is a saying that buy Indian goods and services. Now it is you must buy Indian goods and services. So this is what is the need of an hour, and India need to specifically focus on this aspect. So friends, this is about the overall overview of economic survey. I hope you all liked it. This is just an overview where I explained that what all provisions are made in this year's economic survey, and hopefully you all get a brief idea what all about this survey. If you really like this video, do if you really actually like this video, then I request you all to please share, subscribe and mention in the comment. Thank you all of you, and God bless you.